Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Stephen Innes. He's the Chief Global Market Strategist at Axie. Steve, great to have you on the show.
Thanks for having me, Brian.
Now, before we speak to you, Steve, let's take a look at how markets around the region are performing. And we'll start with the SGX, which is at 2,902.28. It's up 0.73%. Bursa Malaysia is up 0.33% at 1,575.62. Across the region, we've got the Nikkei, which is up 0.46% at 30,156.03. Shanghai Composite is up 0.34 at 3,654.57. The Hang Seng is at 30,769.2. It's up 1.48%. The ASX 200 is up 0.7% at 6,828.7. And the Kospi is up 0.22% at 3,086.53. Now, it's a sea of green across the region. Steve, what's going on that you need to tell us about?
It's just the overriding theme is that, markets are are just celebrating a society at large. We're in a much more optimistic point right now than we've ever been with the vaccines showing scientific results on the ground to validate the efficacies of these vaccines. We have Israel rolling out really good studies right now, and they're reopening again. And if we map back to those studies, it really looks good. Things are really good. So all it really means is getting the jabs delivered. And we'll probably be returning to a state of normalcy sooner than expected. Look, we're still got a long way to go before it hits, but at least there is that proverbial light at the end of the tunnel. So I think that's a great deal to do with it. We've also got this massive amount of U.S. stimulus that's going to come. So we've got reflation trades happening. That's a new buzzword in the markets. Basically, what it means is everything gets more expensive, and that's the nature of reflation. Stocks theoretically get more expensive, but under the hood, we're seeing some of those very expensive stocks selling off to make room for some of the less expensive stocks under the reopening narrative. So overall, it's a pretty rosy picture that we're seeing, despite the fact that some tech stocks are selling off, but other stocks are replacing those in people's portfolios.
And I'm going to talk to you about the tech stocks later, Steve, but I'm going to ask you one question. There is one thing that's making markets nervous. It's Federal Reserve Chairman Jerome Powell's speaking to Congress. He's got to do it twice this week, sometime later tonight, US time. Why are markets nervous about this?
Yeah, it's a good question. I think one of the problems is that the Feds have been really talking down taper for quite some time now, and it's sort of a situation where perhaps the Feds have got themselves into a corner. They don't really have much more dovish policy room to go without hinting at negative policy rates. But really, they've got this yield curve control mechanism, and I think they can easily come into the markets and start buying bonds again if the yields rise too far. This is not 2013 taper tantrum all over again. This is completely different. This is about the market and people trying to draw roadmaps back to 2013. The Fed's been pretty clear on their mandate up till now that they're going to allow the economy to run hot. Couple of things we have to really keep in mind here, okay? The markets are getting way ahead of themselves, but really what it takes to enter a taper tantrum is the Fed's what they refer to as terminal rate. Right now, the terminal policy rate's around 2.5% for the Feds. The markets are nowhere near repricing that higher. That's first of all. So they're not expecting Fed funds to raise above 2.5%, and they're not even expecting Fed funds to raise until 2023. The other thing is adding what they call term premium. What term premium is just a funny, fancy word for saying how much energy is getting put into the back end of the bond yields. Speculative energy is getting put into the back end of the bond yields. There's not that much. That's the thing. People are just getting way over their heads right now because interest rates are going up. Interest rates are hardly above pre-COVID conditions. They're just sort of getting above those levels right now. And the steepeners are happening. Steepeners are happening because the economy is recovering. So I think what's going to happen is we're going to see some of those playbacks sort of come back a little bit to normalcy, especially after Chair Powell waters down any thought of taper tantrums or any taper talk, I should say, hitting the markets this year.
Now, Steve, I've got to ask you one question about 10-year bond yields. There seems to be a correlation between tech sector valuations and 10-year bond yields. They seem to be extremely sensitive to that. Can you break it down to us as to why that's happening?
Yeah, it's, what happens is there's a correlation between there that's pretty strong. Valuations generally get mapped to 10-year treasuries, pretty much because that's really where tech investors are looking on a 10-year horizon. When you think about it, you buy Apple and you're looking for a long-term hold. Generally speaking, I mean, these markets are a little bit different because we have investors trading days, retail investors, but I'm just talking about normal investors. So those correlations hold. Generally, if you look at a rate of about 1.5% on a fair value basis, that would probably mean about possibly about a 1.5% decrease in fair value of those equities. But that's not that great because what's going to happen is, people are still going to be buying those stocks, even if they come back a little bit. Even if a tech stock falls 1.5%, it's still not that big of a move. People are still going to be buying that stock.
So now let's move on to oil markets, because that's continued to be decidedly very bullish. What's your view on oil prices in Q2, particularly given the current supply squeeze?
Well, we're coming from a very low base effect, and I think the reflation trade narrative across all commodities, just not oil, is going to continue to resonate. That's just the fact that there's just going to be higher prices. The thought is here is that, from my understanding, although I don't have any private knowledge of what Saudi Arabia is doing, I'm just hearing what other people are saying, and I'm not even sure if they have private knowledge of what Saudi Arabia is doing. But apparently they're happy with oil prices moving higher. We'll see once we get to the meeting whether there's some pushback from other OPEC members about wanting to put more barrels back to the market right now. But I think one of the big things that happened in the market was this Texas freeze. I mean, it just provided another bridge, to distance the market from the dark days of winter into the recovery element of spring, when there's going to be more vaccines rolled out and more people driving and more people hopefully flying at that point. So I really think we're on a positive tangent for oil. I think oil goes 75, 80 quite comfortably on Brent. But from there, I'm not really sure. I'm not really sure if we're in that super cycle that everybody's alluding to. I think we'll have to wait and see how the summer wears in. And if the U.S. dollar continues to weaken, the next phase of the rally, in my view, is going to be based on the inflation narrative, and that's really going to get triggered by a weaker U.S. dollar. So, I think we could go much higher, but it really, the stars really have to align for oil markets above 80 to push them up to $100, and that'll require a much weaker U.S. dollar, in my view.
And Steve, this is against a backdrop of long-term diminishing demand, because basically the whole push towards renewable energy is really gaining momentum.
Yeah, so this is the argument here, is that Saudi Arabia might want to push as much oil as expensive as possible, realizing that. So, they wouldn't want to keep the market short as long as they possibly can, because they know that there's going to be those diminishing returns. So why not just try to squeeze the market for as much use as they possibly can during the interim, knowing that at the end of the day, the prices are going to end up giving way to the green energy program. My view is that they're looking for cash up front today rather than looking for deferred profits later.
Now, Steve, thank you very much for coming in and for your insights.
Thanks for having me, Brian.
Now, we've been speaking to Stephen Innes, Chief Global Market Strategist at Axie, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.